Well, Jayendra Rana here. Good morning. So, product today is Directors and Officers Liability Insurance. Directors and Officers Liability Insurance. The Directors and Officers Insurance protects your company's directors and decision makers from the losses or cost arising from legal liabilities. It means your company and your leaders are protected from the cost arising legal liability like ransomware, bail and bond cost, public liability cost, etc. So this fulfills the requirement of investors, stakeholders and regulatory bodies who mandate D&O insurance for doing business. Because this directors and officers insurance ensures that legal defense cost and potential settlement of judgments are covered, maintaining the financial stability of the company. It also provides assurance to investors that the company's leadership is protected, enhancing overall investors' confidence. And the policy shields directors, officers, and decision takers from personal financial loss due to legal actions arising from their decisions. So, the coverage of the policy includes legal fees or defense cost, bail bond expenses, out of court settlements, investigation costs, managing public relations, kidnap and ransom cost, extradition cover, self-reporting expenses cover, additional limit for non-executives, directors and officers. These are all parts of the coverage. Because the directors and officers liability insurance is insurance coverage intended to protect individuals from personal losses if they are sued as a result of serving as a director or an officer of a business or other type of organizations. So it can also cover the legal fees and other costs the organizations may incur as a result of such a suit. So directors and officers liability insurance covers directors and officers or their company or organization if sued. Most policies exclude fraud and criminal offences. The policy claims are paid to cover losses associated with the lawsuit, including legal defense fees. Side A coverage covers directors and officers for claims where the company refuses to or is financially unable to pay for indemnification. Side B coverage covers the losses of directors and officers when the company does grant indemnification. And Side C coverage, also called the entity coverage, extends coverage for corporate entity itself. So when D&O insurance applies to anyone who serves as a director or an officer of a profit business or non-profit organization. So D&O insurance policy insures against personal losses, and it can also help reimburse a business or non-profit for the legal fees or other costs incurred in defending such individual against lawsuits. So D&O insurance claims are paid to directors and officers of a company or organization for losses or reimbursement of defense cost if legal action is brought against them. Such coverage can also expand to criminal and regulatory investigations or trial defense cost. Civil and criminal actions are often brought against directors and officers simultaneously. So D&O insurance is akin to corporate governance, corporate law, and the fiduciary duty owed to stakeholders such as shareholders and beneficiaries. So the type of D&O insurance policy contains the types of insurance agreements. They are commonly referred to as Side A, B and C. The policy is very common among the corporates because the big firms who are having directors and officers, for their any omission or negligence, the liability could be huge. So the policy provides the coverage but excludes the Office of Foreign Assets, Control Sanctions Clause, financial insolvency, bribes and commissions, money laundering, future offering of securities, war, e-smoking device, opiates or narcotics, product liability, employee retirement income and security. They are not in the coverage. They are excluded. But the question is, this policy is so common among the corporates that almost all the general insurance companies are issuing it. Almost all the general insurance companies provides it. And the policy provides very wide coverage because D&O policy provides cover for the personal liability of directors and officers arising due to wrongful acts in their managerial capacity. The defense costs are also covered and are payable in advance of final judgment. This policy provides protection for claims brought against directors, officers and employees or actual or alleged breach of duty, neglect, misstatements or errors in their managerial capacity. So what is unique about this policy? So there are certain features which I would like to show to you. See the main exposures, of the policy, and then who can bring an action, potential plaintiffs, can the company protect the directors, who is protected by the policy, what protection is provided, what is wrongful act, types of allegations by shareholders, employees, customers and clients, competitors' clients, government and regulations, and the basic scope of cover for directors and officers, company reimbursement, principal policy features, scope of cover, and then few extensions which are available with the policy, minor exclusions of the policy, and suggested limits. These are the basic things which are part of the policy coverage. Now, see, having pioneered the director and officers liability insurance, this is most preferred liability insurance in India because all corporates prefer it. Some of the specific exposures that make D&O insurance necessary for the directors and officers are vulnerability to shareholders or stakeholders' claims, sexual harassment, discrimination, allegations, and other employment practices violations, regulatory investigations, accounting irregularities, exposures relating to mergers and acquisitions, corporate governance requirements, compliance with various legal statutes. So these are the reasons, specific exposures that the policy covers and provides the coverage for that. And there are some key features of this policy, like advancement of defense cost, advancement of defense cost and claims made, principles, claim must be made during policy period, right to defend cover, cover for subsidies, outside directorship coverage, cover for retired directors, employment practice liability, cover for directors and officers, cover for failure or negligence to supervise against any professional indemnity related claims, cover for regulatory crisis response, cover for assets and liability costs including prosecution, bail, bond and civil bonds expenses, and then damage to reputation, and cover for heirs, estates and legal representatives, bilateral discovery period, emergency cost cover, kidnap response cover, special access protection for non-executive directors, cover for pollution related claims for defense cost and shareholder claims, then insured versus insured, that is defense cost cover, and severe ability, that is non-guilty insured is covered. And the simple question is, who can bring an action against directors and officers? Anyone, that is employees, suppliers, competitors, regulators, customers, shareholders, and even other stakeholders. The cover applies to former, present and future members of the board of directors, the management and any employee performing a managerial or supervisory role. Because today's business operates in a fast moving and a dynamic environment. So management is closely involved in the day-to-day business operations, and important business decisions have to be made on the spot. Such entrepreneurial environment can have a dangerous downside as well, because the management is so closely involved in daily operations and is often making key decisions. Small company owners and managers are extremely vulnerable to lawsuits from regulators. Shareholders, customers, competitors, employees and government bodies, amongst others. A costly lawsuit of this kind can have a particularly severe impact on individuals, since the owner's personal net worth is often tied to the financial health of the company. Keeping this in view, insurance companies have designed a pre-underwritten directors and officers liability insurance policy, which is designed specifically for the needs of unlisted small and medium-sized enterprises. So the policy offers an easy way for small and medium-sized companies to secure protection for their director and officers from such lawsuits and claims. And the policy experts can help assess the amount of coverage your company needs based on your risk exposure and offer you comprehensive protection. So to protect the company's director and officers from employment practice litigation, regulatory investigations, customer suit, accounting irregularities, and other stakeholders' claims, this policy is must. Because this will not cover the prior claims and circumstances, deliberate, dishonest or fraudulent acts, and BIPD claims with carved back for defense cost. Otherwise, the liabilities of negligence, errors, and omissions are covered under the policy. So, this policy would be useful for all the corporations to fulfill the requirement of investors, stakeholders, and regulatory bodies who mandate D&O insurance for doing business. So this directors and officers liability insurance protects your company's directors and decision makers from the costs arising from legal liabilities. It means your company and your leaders are protected from the cost arising legal liabilities like ransomware, bail and bond cost, public liability cost, etc. So this will fulfill the requirement of investors, stakeholders and regulatory bodies who mandate D&O insurance for doing business. Thank you. Thank you very much.